What is going on? In this video, we're going to cover some massive macro updates on the crypto industry. And then we're also going to go into some technical analysis going into this week, because I think there is first of all, opportunity to save some capital and opportunity to make some money as well, depending on which asset you are investing in. Again, none of this is financial advice. I'm not your financial advisor. I'm not your accountant, and I'm not your Instacart shopper. So don't ask for bananas or rice. But what you can ask for is a great live stream and some great information for educational purposes only. So first and foremost, what is the big news? You know, they call me Jeff No Nonsense Sekinger. It is a really big exchange coming where Fidelity, Schwab, and Citadel are launching their first crypto exchange. All right. And what's the exchange called? It is called EDX Markets. So it is a sign that Wall Street is continuing to pursue the opportunities in crypto. This is a really big deal, and I'm going to share with you exactly why it's a really big deal. First of all, Schwab, Citadel, and Fidelity are massive. Okay. We already had the largest firm in the world with over 10 trillion under management, BlackRock, partner with Coinbase and release institutional Bitcoin trading to their clients. And the reason why they chose Bitcoin was because it was deemed a commodity. But now that the SEC is starting to come in and say, hey, you know, this is likely to be a security. We're pursuing these 9 cryptocurrencies as security. Some of this is going to be regulated by the CFTC. Some of it's going to be regulated by the SEC. We're starting to see other financial institutions go into the industry in different ways. And we're starting to see that with Citadel, Schwab, and Fidelity. Now, how big are these companies? I'm going to talk about why this is really, really important as well. Let's see how big these companies are. Okay, so Charles Schwab alone has 12.3 million active brokerage accounts with $4 trillion under management. So they're really not too small at all. They're a massive broker dealer, and they've been around for quite a while. So the fact that they're launching an exchange is really important. Okay. We also have Fidelity, which has 11 trillion under management from customer assets and 38 million active brokerage accounts, which is huge. I mean, they're like 3 times the size of Schwab. So Fidelity and Schwab partnering together is huge. Obviously, Citadel is probably pretty big too. Let's see how big it is. Citadel has $253 billion under management, and they do multiple things. They're really, really important for the financial infrastructure because they not only manage really big funds and quite a lot of money, but they also they're actually the secret actor behind all of the exchanges, and they provide liquidity for the really massive exchanges. So if you heard of the really, the GameStop thing where, everyone on Reddit and on Twitter were buying GameStop because they were trying to short squeeze a big institution called, I think it was called Melvin Capital. And what happened is they were doing that successfully. So the price of GameStop went up hundreds of percents, and that fund got screwed. And what happened was Robinhood actually turned off the buy button on GameStop. And what happened is the stock price corrected. And a lot of people are blaming Citadel because Citadel does all the transactions and liquidity behind Robinhood. So Citadel is like kind of the secret company that is behind a lot of different broker dealers across the entire world. So they not only control 250 billion, but they also control significant amounts of trillions and trillions of dollars of transaction across different broker dealers. So the fact that these 3 companies, Fidelity, Schwab, and Citadel, are partnering together on EDX markets, that is a very telltale sign. I don't know what else we could possibly show that's more bullish besides these 3 companies partnering and BlackRock that has over 10 trillion under management partner with Coinbase and start offering trading to their clients. I mean, it is very, very clear. And I've talked to people in person about this before, where there's actually an interview by Jeff Bezos, and I don't know what the interview is called, but he talks about how during the tech bubble, there was a massive sell-off, obviously, and Amazon went down 95%. And he said he kept seeing his stock price going down and down and down and down. But he also saw the fundamentals going up and up and up and up for Amazon because of the amount of new customers, the amount of new accounts, the amount of orders, the amount of volume, all that stuff that was showing positive fundamentals for Amazon. All that was growing beneath the entire market and Amazon stock tanking. Now, he knew this was really great because what happened was we had the stock price tanking and tanking, which means you could buy at a discount. Meanwhile, the fundamentals are growing, which really puts value into the overall equity of the company. So that was an absolute recipe for massive price appreciation. And that's exactly what's happening right now in this industry is we've been waiting. Most people think regulation is bad. And obviously it can stifle some innovation and growth. But in order to have tens of trillions of dollars go into the industry, you are not going to see institutions that are this big start to put large amounts of capital, time, and energy into it because it's not worth the risk. They're happy to go create a 2x or a 3x or a business that does pretty well, but not amazingly well because they don't want to take the risk of getting hundreds of billions of dollars in fines into being that first company that gets screwed over by regulators and that, puts a bad taste in the retail customer's mouth because they launched something too quickly. So you got to realize while a lot of people on Twitter and social media, they want to ape into things, these big institutions, they want to wait until they significantly reduce the largest risk, which is regulation risk right now in this industry. And that is happening. We actually have another video coming out this week, but the regulation is starting to become very clear. They're actually, the SEC has come out and said, number one, Bitcoin's a commodity. Number two, they're starting to look into different assets. So first and foremost, they're launching their own CBDC, and pretty much every major country is launching their own CBDC. And there's different blockchains that are behind this. And maybe if you saw my video about ISO 222 that's happening really starting next year, it's a really big deal. So anyways, central bank digital currencies are happening. Second thing they said in this big report, the SEC the other day, was that they are going to regulate DeFi assets in February of next year. So in February of 2023, they're going to have a bunch of clarity and regulation around DeFi specific assets in February. And then later that year, I think it was in November, but you'll see in this video later this week, they are actually going to start the regulation of NFTs as well. So, and the first thing I think they're starting with is stable coins. And then later on, I think in the next year to 3 years, they're launching CBDCs. But they're starting with stable coins, then regulating DeFi assets, then NFTs. So we're going to start to see each little sector within crypto get its regulatory clarity. And whether you think it's good or bad, it's going to allow a lot more money to come in to the industry. And I think it's going to be very interesting to see what they do on the DeFi side, because I wouldn't be surprised if at least in the US they ban everything that has no KYC, which would be like MetaMask and pretty much every DeFi application that we use, like Uniswap, SushiSwap, Aave, all that stuff. It's going to be really, really interesting to see how they regulate that in February of 2023, which is really right around the corner. It's going to come fast. It's like 5 months away. So if you guys are new to the live, Fidelity, Schwab, and Citadel are launching their own exchange called EDX Markets, which they control trillions and trillions of dollars, 11 trillion, 12 trillion, and Citadel is 253 billion, not to mention they provide liquidity for the largest broker-dealers in the world. So really big deal. You should be, honestly, if you're excited about the crypto space, excited about digital assets, those types of things should excite you, because when you see the institutions actually making a meaningful decision to go into an industry, it is a telltale sign that this is coming, all right? And when I say this is coming, I'm talking about tens of trillions of dollars is coming. But there's a lot of garbage in the space, and it's really important to do your own research and figure out how to make money in the industry. And I would also say that what's important too is to try to figure out, the only way to make money in crypto is not to just buy coins and hold on to them. There's a lot of other ways. You can participate in the development. I talk a lot about creating wealth in different ways. And one of the best ways is to find trends. And if you can't be the trend, which is in this case, you would create your own, coin or project, you can also feed the trend. So if you want to feed the trend, you should be asking yourself, hey, how can I actually, learn software engineering and start to work for a Web3 startup company or an early stage crypto company? How can I allow, assets to be tokenized on top of blockchains? Can I launch NFTs for businesses? There's a lot of different things that you can do when you simply step back and think, okay, this industry is about to exponentially grow. How can I be involved? And you don't have to just buy coins or just launch coins. I think it's important to kind of see all those things. Next thing I would say from a technical standpoint, number one, I think Bitcoin's a little bit manipulated just because if you look at the tops of the markets, we had the CME futures launch literally at the top of the market. And then right before the top of the market, we had Bitcoin's futures ETF, which you can go long or short on these futures. But you can absolutely short the heck out of Bitcoin and not have to buy Bitcoin at all. So you don't have to own the asset, but you could short trillions of dollars against Bitcoin if you wanted to. So I really do think that Bitcoin's price is manipulated, and it's kind of important to be aware of when these things happen relative to the all-time highs. But let's go ahead and look a little bit at the charts, and that's going to be a whole nother video, to be honest. What are we on? We're on Coinbase. On Bitstamp, at least if we're looking more on let's look at it like a shorter term time frame because we're going into this week. So first and foremost, I want to let you know, going into this week, we just had higher than expected CPI, which means that everyone was expecting a 75 basis point rate hike, which everything in the world is revolving around what the Fed does. And everything the Fed is doing is revolving around CPI and inflation. We just had higher than expected CPI, so what's really likely to happen is the Fed's going to hike rates. And the question is, are they going to do 75 or are they going to do 100 basis points? We just saw Warren Buffett say on Friday that he believes the Fed is now going to hike 100 basis points this coming week in September, which is on the 21st. All right, so one of the largest and most successful investors of all time is expecting a 100 basis point rate hike, which is likely to bring the markets down. I'm going to show you, let me actually show you the stock market right now, which it's very obvious that we're going to continue this downtrend. If we look at what happened, right, which we talked about when I was actually in London, I shot a video when we were right here. I said, hey, if we come and actually test the top of this resistance line and we get rejection off of here, that is super, super bullish. Not to mention that the rejection is also happening on the 200-day moving average. So perfectly, which is pretty much the most bearish thing you can happen when you've got a bearish macro environment and you've got a significant piece of or resistance line, and then you have the 200-day moving average rejection right off that same resistance line. That's about as bearish as you get. So that's exactly what we saw. We saw stocks come down, have a little bit of a right shoulder, and then we headed right below this support, which flipped resistance and now is broken through. So it's very likely that we continue down, not to mention the Fed is hiking this week. So could we see capitulation? We will see, but I think overall this week is definitely going to be more bearish than bullish. And I would say that, Bitcoin is doing the same thing, right? It kind of broke up. We had the negative CPI news, 10% sell off or so, and now we're starting to head back. So I think it's really obvious that we come close at least to testing 18,500, if not 17,500. And then if the stocks melt, I think Bitcoin has the chance of the mid-teens. And again, that's not always a bad thing. Everyone's like, isn't that a really terrible thing? Well, it's only terrible if you think that price going down is bad in the short term. Okay, when you start to associate or not associate price going up with good and price going down with bad, and you just look at them as a matter of fact and align your portfolio and actions to take advantage of them, because volatility is just opportunity. When you start to really think that way, you can actually become a completely different investor and make a lot more money and not have an anxiety attack every time Bitcoin moves 4% down, okay, which happens literally every other day. All right, Ethereum also, let's go ahead and check out what this stink pot is doing here. We're coming down, and I think it's very obvious that we come a little bit lower than this, and we come and retest 1280 because we've had some resistance here. I think it's very obvious that we've now broken down past this, left kind of shoulder mark support line, which we had support over here. We broke right through there today. I think it's very obvious that we come from 1333 down to 1285. So it could be a little nice short-term short. And after that, I think what I would be looking for is this type of move. We had a really big capitulation right here, which is when Three Arrows Capital and everyone and their mom went bankrupt and everyone sold everything, including their rice and bananas. But that would cause a really big wick. I think what's wiser is to not aim for the bottom of the wick, but look for a more significant support level, which I believe would be right around $1,000. So if we do break below this 1280, and not just a little wick, but like really if we break below like 1230, I think it's really quite obvious that we're heading to the $1,000 range. And we'll address after that. No one really knows exactly how low ETH can go. But I will say this. I talked about, hey, let's show some bearish and bullish stuff today. And what I do want to also share is I think that the old timer, the grandpa XRP, could be ready to launch. And the reason is because if we look at this massive downtrend, which we've had for quite a long time. So I think we're in like a log chart or something here. Yeah, here we go. So first of all, look at the all-time highs back in 2017. We had, we came up to $3.30. We never even broke that high this year because what happened was right when we had XRP started to launch, the bull market started to gain some traction. The SEC sued Ripple and XRP got delisted from all the exchanges. So it got delisted from all U.S. exchanges, which really has put a cloud over Ripple's head. Meanwhile, they have continued with partnerships. They have massive partnerships with the largest banks in the world. I'm not like a super XRP army type of a guy, but I do think that they are set in a decent place. I mean, their supply is extremely centralized, which actually could be a good thing. If you look at some of the most successful equities and projects, a lot of their supply is really centralized. But I mean, it incentivizes the founders. It also doesn't allow as much retail to dump on every little piece of negative news. I won't go into that, but it does look like we are potentially going to break this downtrend. And I think part of the reason is we'll see if we do. I think I heard, which I don't do a bunch of XRP research, but I did just put some decent money in it, is because I heard that this week we're getting some verdict on the case of the SEC against Ripple. Not sure if that's true. Not sure if I just heard that incorrectly, but I did hear that Ripple is going to get a verdict or at least some very significant news from the battle that they've been battling for over like a year and a half now. Typically, these SEC cases on what they're dealing with will last like 2 years. I think we're even coming close. We're not quite 2 years there. I think we're at like 20 months. I think we're like 20 months into their whole debacle with the SEC. So we'll see if Ripple actually does get that news this week. Again, I haven't verified that news is actually coming out. I think I heard tomorrow. I'm not sure if that's actually coming out this week or not. Regardless, Ripple, if you look at on a shorter term time frame, like let's just look at a daily time frame. If we look at the sell-off, which recently took us to this low here, and even this capitulation mark, even from right here, which is back in May, we have had an uptrend in the RSI since May, which the RSI in any indicator is not everything, but at least it's showing more strength, and Ripple is starting to head to overbought territories, which is right around 70 on the RSI, which, back when we've hit 70 previously, we had a pretty big move, which took us up to 91 cents, but this move was 66%, which isn't anything to shed an eye on. So I actually do have I think I have a conditional long set on XRP, but it's a pretty safe conditional long, meaning we really have to break this. I think it's above like 45 cents or something. So if we do get that big move and the news does come out and we do break these previous swing highs, I'll be in a long. If not, I've still got a spot position in it that I'm just holding on KuCoin, I think. So anyways, that's the news. If you didn't catch this whole live, we went over a lot. We went over the partnership with Citadel, Fidelity, and Charles Schwab with EDX Markets, which is a brand new crypto exchange that is coming out, which just further shows crypto adoption by the largest institutions in the world. They have 4 trillion and 11 trillion under management with tens of millions of customers. Citadel has 253 billion under management, and they pretty much provide all liquidity for the largest broker dealers in the world, including Robinhood. We've also seen BlackRock over the past month and a half, 10 trillion asset manager, launch Bitcoin trading for their institutional clients with Coinbase. And we've also seen the SEC come out and say, hey, we're going to regulate first stable coins, then DeFi, then NFTs. And now we are starting to see a little bit more of a sell-off with going into more of a bearish type of week with the FOMC rate hike this week, which could be an entire 1%, which would definitely send markets down the tube. So if we see 75 basis points, I think we might even see a little bit of a bullish bounce, to be honest. So I wouldn't be in any massive short positions right as the news comes out. But if we do get a 100 basis point hike, you will definitely see that reflected in the price. Not financial advice, but I think it's quite obvious if we see 100 basis points, it's likely to happen. Ethereum is also still in a pretty heavy downtrend. We got some significant support or previous resistance that's likely to turn support. If we break that, I think we're heading to $1,000. And again, XRP with the decent break of resistance. We haven't officially broke it. I wouldn't even consider that. But it is looking like we're starting to get to that time where we could actually break the resistance, which I know XRP Army has been waiting for like almost 2 years. Actually, longer, for like 6 years since the last bull market, but 2 years really since that whole investigation has started. And again, I believe that I heard there was some news coming out this week for Ripple and that whole case with a verdict actually being decided. So we'll see if it happens. Anyways, I think someone asked, we'll see if we have any questions, but the ETH merge, I think it's bullish for ETH in as far as price. I'm not sure as far as the protocol goes, because I don't know how good it is to have a highly deflationary asset. And I also think so. If I were to tell you, obviously very short term it was bearish. It was a sell the news type of event. Midterm, I think it's bullish because it likely, as long as activity stays up on Ethereum, it makes it deflationary, which will help price. Longer term, I think Ethereum is going to get leapfrogged by better technology, faster transaction speed. I don't think they're going to be able to continue to change everything on the protocol. I just think they're going to become the MySpace of crypto. But in the midterm, I think it's pretty positive. And I think once all those 5 steps that they're doing to make the chain more scalable and everything, the other 4, they still have 4 other major steps to integrate for Ethereum to make the full transition to do what we want it to do. Once that happens, I think we'll get a little bit more larger money coming in, because I think a lot of institutions kind of got a little bit out of Ethereum in case there is something wrong with this whole merge. So that's my opinion on it. But I am a little bit, to be honest, a little bit more of a proof of work type of maximalist. I wouldn't even say a maximalist. I'm just more of a fan of proof of work, but because I think proof of stake can create some more centralized issues and governance can kind of be skewed. Like I heard Do Kwon had a ton of Luna. He just created a zillion different wallet addresses, put a bunch of Luna in these different wallet addresses, and then voted on all the proposals to make, Terra and Luna do what he wanted it to do. So I think there's some problems with proof of stake and some of the governance issues that come along with proof of stake. But and I also think some types of sharding can be dangerous for some of these like proof of stake blockchains as far as security goes. So that's my personal opinion, but we'll see how it pans out for Ethereum. I just think that, long term, we're already seeing it, by the way, with Sui and Aptos, and there's like 4 other chains that are coming out that are going to be extremely quick, and they have a ton of VC money behind them. They already have people developing on them, and those chains are right around the corner. So we're already going to see it coming into this next bull market. So I don't know. We'll see if Ethereum does well long term. I do think it'll get leapfrogged, but in the meantime, I think it's a positive transition for Ethereum. So we'll see what happens to XRP this week. I think it'll be very interesting. Thanks so much for watching, guys. Have a great week, and we will actually launch a video on Tuesday, so keep the eye out for the launch on Tuesday. Have a great evening, guys.